Welcome to Markets Now. I'm Michelle Rook along with Nick Tsiolis with the Farmer's Keeper. And let's talk about this trade this morning. Everything is in the green for the most part, except for soybeans have kind of seen the August beans at least kind of slip a little bit lower. But we had a nice rebound in the grains yesterday. So are we trading weather? Are we getting this WASDE report kind of put in the rear view mirror? What are we trading today?
I think it's a combination of factors. As we've seen, just the forecast in the next few days tend to be a little bit drier, and temperatures certainly in some areas in the south and the western grain belt hitting way above the 100-degree mark. That's going to have an effect there. We're seeing beans trade down on that. Otherwise, also, we finally got a nice little export report yesterday. Even though we're still down quite a bit year over year, it's nice to see that start to pick up, because globally we know that the Brazilians, we've confirmed now, have had a really big crop. So supply is becoming less and less of a factor on a global scale, not necessarily everywhere throughout the grain belt in the US though.
Yeah. Is the market also concerned, it's not new news, but about the Black Sea grain corridor maybe closing here on Monday?
Sure. So we're almost, I think, at officially a year that the grain deal's been going on here, and it feels like, at least for the past half of the year, as the first extension hit, we just keep kicking the can down the road at every step of the way. I still tend to think that the Russians have more to lose by playing this game of chicken than not, and they have every incentive to need to get foreign currency coming into their economy. So I still think, even if it gets suspended for a few days, that they'll get back on something, because some of their demands are probably not going to happen from so many of the EU countries.
You bet. The other boost that we have seen here in the grains has been this pullback on the US dollar, as we had good CPI news out this week. And so do you continue to see that as a positive factor for the commodities?
Well, it's definitely a positive factor for the consumer. Never bet against America, right? It's great that, I don't agree with all the policies that we have going on, but it's great to see that we're having more of a soft landing than what many people, myself included, expected, because it's nice to see that we've got inflation down to 3% here. Hopefully that's going to help everybody's pockets just in time for summer, and hopefully also help the producer in terms of just purchasing inputs over the course of next year, as we start to look at the 24 crop in the next several months coming up.
Yeah. And coming out of the WASDE report on Wednesday, we had bearish reaction initially, but I think there's a lot of debate still circulating about yield going forward, and that both corn and soybean yield might need to come down. What is your thought? You've been out in the country.
Sure. So, by no means is the crop still made yet. We got lucky with rains finally breaking and coming in here, but you can talk to any producer and they'll tell you, it's almost never enough. So, in a lot of areas that are just hanging on until their next rain event, like Northern Illinois or Central Illinois, they're not taking anything for granted. But certainly, if you look at a lot of areas, West Central Indiana, up and down, a lot of areas of north central Iowa, producers are very happy there and have been catching the right rains. And those are some of the areas where it's conceivable that certain farms with the right practices could have a 250 bushel average on corn. So it's very much a tale of two cities here. Same thing up in the Dakotas. One of our reps was up south of the Bismarck area last week. Nobody would, I don't think, would have expected on May 1st that a lot of people in the Dakotas would be looking at potentially a really healthy crop this year. So I'm trying to look at the bright side of all those things, but there's still a lot of challenges out there.
Yeah, and we still have a little bit of the season left to prove whether that yield's going to bear out or not. Um,
Absolutely.
Also, we have July contracts going off the board today.
Yep.
And of course, basis plays have been going on here. And when we rolled from July into these back months, obviously the basis did weaken. Where are we at right now?
Yeah, so we're seeing just nationally a lot of, especially a lot of end users starting to dial back a little bit. But for a lot of areas in the country, it's still way early to be looking at any type of harvest basis. I always say look at setting basis like you might the futures portion of your physical grain contracts, which is how much have I committed already to elevators, and look at that as a percentage as well. And if you see something that's healthy out there, take a bite off, because on the chance that the USDA somewhat is right in being conservative in not reducing yields as much as a lot of us out there in the field would have liked to have seen, that's going to have a pretty strong effect on basis coming in the next, 6 to 8 weeks here as you really look at making those basis trades on your grain.
Yeah. But generally, the basis weakening kind of told us that the end users feel like they have enough supply around them to get to the new crop, right?
Absolutely, yeah, and in some cases, I mean, corn is kind of defying this today, but you can just see every single day, one way or another, regardless of what the news is, we're seeing just big swings in between old crop contracts and new crop going back and forth seemingly. But I mean, looking at corn right now, those of you down south, a lot of you trade September corn as a harvest contract. There's a $1.13 spread right now between July and September as we close out that contract, right? A lot of elevators have already moved to September from weeks and weeks ago,
Oh, yeah.
as it is.
Yeah, definitely. But do you get the sense that there's really any farmer selling going on right now, Nick?
No, I don't think so. We saw a lot of selling over the course of June when we had kind of two spike moments, both on Thursday and Fridays of the weeks. We saw a lot of grain get sold at that 595 to 620 level in corn. And now everyone kind of sitting more in a wait and see mode and waiting for another rally. We haven't seen a lot of incentive yet, really, from the producer to make more sales until futures come up. And there hasn't been a lot of incentive from the end users to bid up to go and secure that grain ahead of time as it is.
All right. What's your advice for livestock producers in terms of getting feed needs met here? Because we had so many of those tight situation and shortages last year.
We talk about rewarding the market a lot of times in terms of selling grain, but as a procurer of grain, rewarding the market, buying some grain. And we've had some good opportunities here below $5 December corn to make that happen. I would be slowly picking up my needs as I'm going. But then again, you're probably going to have to pay for it to get the producer to actually make that sale in the first place.
Yeah. All right. Well, thanks for joining us. Great advice as always. Nick Tsiolis with Farmers Keeper, and that's Markets Now.